Self-employment taxes are levied on self-employed individuals who own their own business instead of being paid a salary or wage. The self-employed do not have an employer to pay and withhold Social Security and Medicare taxes. Instead, they pay self-employment taxes on the net earnings of their own business. So since they are not an employee, they have to pay the employee's Social Security of 6.2% on their net earnings. Since they don't have an employer who matches the employee side of Social Security, they also have to pay the employer portion of Social Security at 6.2%. Also with Medicare, they pay the employee portion of Medicare at 1.45% and the employer portion of Medicare at 1.45%. So when you add all these percentages together, self-employment tax comes up to 15.3%. Now keep in mind that this rate is applied to the net self-employment income, not the gross earnings of the business. When calculating self-employment, you have to keep in mind that Social Security wage base of $128,004, as well as the Medicare earning thresholds where the additional Medicare may apply. So let's look at a few examples. The first example is where all the person's earnings are from self-employment. So Allison earns net self-employment income of $74,200. She doesn't have a second job. So we can calculate Social Security and Medicare together. Notice that the $74,200 does not exceed the Social Security wage base, so it's pretty easy to calculate her self-employment tax. We'll take her self-employed earnings of $74,200, multiply that times 15.3% for self-employment tax. So her self-employment taxes for the year are $11,352.60. It's a pretty high tax. Okay, let's look at example 2. Now with this one, we have a person with self-employment income and a second job where Social Security and Medicare have been withheld and paid by the employer. It says Martin Hughes files married filing jointly and earns net self-employment income of $152,000. He works a second job from which he receives FICA taxable earnings of $95,800. So to get started, we will calculate the Medicare portion of his self-employment income because that's always the easiest. We do need to, however, add his self-employment income plus the earnings he received from his second job to make sure that he has not exceeded the Medicare threshold of $250,000 for married filing jointly. And when we add those two together, he has not exceeded $250,000. His total earnings comes up to $247,800. So he does not owe any additional Medicare this year. So first thing we'll do is take his $152,000 self-employment income. Remember, he's already paid Medicare on the $95,800 that he got from his second job. He and his employer have fully paid Medicare here. So the $152,000 in self-employment times the 2.9% Medicare rate, and remember that's 1.45 for the employee plus 1.45 for the employer. When we multiply that out, we get $4,408 in Medicare tax. Now it's time for Social Security. And remember, always when calculating Social Security, you have to keep the wage base in mind of $128,400. Now, Martin has already paid Social Security on $95,800. So he only owes Social Security on the self-employment that exceeds 95.8 but is below 128.4, because remember, Social Security is not levied on income that exceeds 128,400. So if we take the wage base of 128.4, subtract the 95.8 earnings from the second job, he only owes Social Security on 32,600 of his self-employment income. So we are going to take the 32,600 and multiply it times 12.4%. That's the employee's portion of 6.2% and the employer's portion of 6.2%. So when we multiply that out, we get $4,042.40 in self-employment taxes for Social Security. Now we'll add the Medicare of $44.08 with the Social Security that we just calculated. So Martin's self-employment taxes are $8,450.40. So now we'll move on to our last example. In this example, we've got self-employment earnings and earnings from a second job, but this time the Medicare threshold is going to be exceeded, so there's going to be some additional Medicare tax due. All right, so Alyssa files married filing jointly and earns self-employment income of $198,000. She works a second job from which she receives FICA taxable earnings of $73,700. So first thing, we'll calculate regular Medicare. So regular Medicare is applied to all the self-employment earnings. So 198 times 2.9% gives us $5,742 in regular Medicare. Now we have to calculate the additional Medicare. So the Medicare earnings threshold for a married filing joint taxpayer is $250,000. So remember, additional Medicare is levied on earnings that exceed $250,000. So we will add up all his earnings, or her earnings first of all, the 198 plus the 73,700 from the second job. Then that amount is subtracted from the 250,000. So she has exceeded the 250,000 threshold by 21,700. Okay, we were going to apply the additional Medicare rate of 0.9% to those earnings, and her additional Medicare is $195.30. So now let's look at Social Security. Always on Social Security, we're keeping the $128,400 earnings or wage base in mind. So all self-employment earned over $128,400 is not taxed. So we need to calculate the amount that is taxed. So to do that, we'll take the earnings limit and subtract out the amount that she's already paid Social Security on. So when we do that, we get $54,700 in self-employment tax that is taxable for Social Security. So 54,700 times 12.4% is $67,8280. So now we will add up the regular Medicare, the additional Medicare, and the Social Security portion of self-employment. And when we do that, Alyssa's self-employment tax is $12,720.10.